For us as investors, CLOs are a gateway to the leveraged finance market. So before we delve deeper into CLOs, let's take a quick look at the leveraged finance market in general, and with particular focus on the European market. There are essentially three pillars of that sector of the credit market. First, the high yield bonds, probably half the size of the new issuance market every year in Europe. Second, broadly syndicated loans, which we'll get to more detail in a moment. And then thirdly, the middle market and private credit sector, which is somewhat nascent in Europe, but is much more mature, at least a little bit more mature in the US on the private credit side and quite mature on the middle market side. But as I said, in Europe, the balance sheet, the broadly syndicated deals are roughly 50% of the leveraged finance market and are the main ingredient into European CLOs. And if we look at the investor base for levered loans since 2010, so post financial crisis, we'll see that banks and CLOs have pretty much swapped their roles as the main investors in that space. The second noteworthy part is what's kind of orange or reddish here. It's the credit SMA funds investing in that space. Now, obviously, with CLOs being the main investor in broadly syndicated loans, that triggers a relatively symbiotic relationship between those two sectors, in the sense that if you have very low issuance in broadly syndicated loans, that will pose a challenge for CLOs, and vice versa. That if there's very little demand from CLOs, then the volume and also the pricing in broadly syndicated loans will be affected.